Have you ever been tempted by an offer that seems too good to turn down? Imagine you're finally getting your hands on that must-have gadget, and just as you're about to pay, the cashier throws in a twist. Why not take it home today and split the cost over time, with no extra charge? It sounds like the perfect deal, right? But let's pause and look closer. Today we're diving into the enticing yet potentially treacherous waters of buy now, pay later schemes. Are they the helping hand they promise to be? Or is there a catch that could ensnare you financially? Let's unravel the mystery behind these alluring offers. Let's paint a vivid picture. You're surfing the web, eyes glued to the screen, and there it is, the jacket you've been lusting after for months. But your bank account isn't as enthusiastic about this purchase. Just when you think it's a no-go, a glimmer of hope appears. Buy now, pay later. It offers 4 easy, interest-free payments. It feels almost like a magical solution. But is it really as enchanting as it sounds? From 2019 to 2021, BNPL loans skyrocketed by an astonishing 1,100%. That's countless shoppers choosing to buy now and worry later. Yet, here's where it gets tricky. Each transaction adds a layer of debt, often invisible, lurking like a ghost in your financial machine. It's this phantom debt that can haunt you unexpectedly. Imagine your financial health as a robust tree. BNPL schemes act like invasive roots, creeping beneath the surface. At first glance, they're out of sight, seemingly harmless. However, they can quietly spread, intertwining and weaving a complex web that can destabilize your financial foundation. Why should this concern you? As we delve into the darker, less discussed aspects of BNPL, you'll see just how these convenient financial solutions might be setting a trap. Let's explore together the shadowy side of what seems like harmless financial aid. Buy now, pay later services are everywhere. They make it super easy to get what you want without coughing up the cash right away. Companies like Afterpay, Klarna, and PayPal are the heroes of this new financial age. 0% interest, instant gratification. What's not to love? But beneath this shiny surface lies a murky issue: transparency. The BNPL market is estimated at around $50 billion. Households could be more in debt than they realize because BNPL debt isn't fully tracked. Unlike credit card debt, which is closely monitored, BNPL debt can fly under the radar, giving a false sense of financial health. Imagine this. The ease of accessing BNPL means even those who wouldn't qualify for traditional credit can rack up debt. This might seem like a good thing, but it can lead to long-term financial strain. Understanding how BNPL works and its potential pitfalls is crucial before jumping in. Think about it. The instant gratification of getting what you want without immediate payment can lead to impulsive buying. Over time, these small debts pile up, creating a significant burden. BNPL providers often lure you in with promotions, making it even harder to resist. It's a cycle that can be tough to break. Let's talk about Sarah. She's a college student who loves fashion. She uses BNPL to buy clothes online, thinking she can manage the payments with her part-time job. But as new collections drop and promotions flood her inbox, Sarah ends up with multiple BNPL plans. The payments add up and soon she's drowning in debt. Those zero interest payments? Not so magical anymore. Ever heard of phantom debt? No, it's not the latest horror movie. It's a term that gained traction thanks to a Wells Fargo report. It highlights the lack of clear measures on BNPL loans and how consumers are managing them. Without a clear picture of underlying debt, especially in households, it's like navigating a maze blindfolded. Data shows BNPL users are often more financially vulnerable. They frequently use these services for essentials, raising concerns about their ability to repay. However, Afterpay claims 98% of their purchases didn't incur a late fee in late 2023. So, is the fear of phantom debt overblown, or is it a ticking time bomb? Here's the problem. The lack of centralized data makes it hard to see the full picture. BNPL companies disclose data at their discretion, which can vary. Some may underreport issues to keep a positive image, while others might not collect comprehensive data. This patchy reporting creates blind spots for regulators and financial analysts trying to gauge the economic impact. Imagine credit card debt meticulously tracked and reported. This helps financial institutions monitor trends, identify risks, and implement protective policies. The BNPL market, however, operates in a gray area with limited oversight. This makes it challenging to gauge consumer indebtedness and its potential economic fallout. Take James, a freelance graphic designer. He uses BNPL to manage cash flow, buying equipment and software. But a few slow months and unexpected expenses later, James finds himself juggling multiple payments. The lack of a clear overview of his total BNPL debt leads to missed payments and mounting stress. Not so creative anymore, huh? In the bustling world of online shopping, buy now, pay later schemes seem like a godsend, especially for those eye-catching must-have items. Yet a 2024 Harris Poll survey for Bloomberg reveals a stark reality. 43% of BNPL users have fallen behind on their payments. Consumer Reports highlights a concerning trend. Many users are purchasing beyond their means through BNPL, inviting a cycle of repayment struggles and accumulating late fees. This phenomenon isn't entirely new. It echoes the layaway programs of the Great Depression era, yet with potentially wider implications today. Juniper Research forecasts that by 2028, BNPL transactions might nearly reach a staggering $700 billion. The lack of comprehensive tracking amplifies the uncertainty about when these debts might balloon into a significant crisis. Without detailed national data, the true burden these debts place on households remains somewhat obscured. The allure of BNPL isn't just about financial flexibility, it's psychological. The immediate satisfaction of acquiring goods without an initial payout encourages impulsive buying. Many consumers don't fully contemplate their repayment capability, leading to financial predicaments. As late fees accumulate, they can spiral into a daunting debt trap, difficult to escape. Imagine someone juggling multiple BNPL plans. It's easy to lose track, and a single missed payment can trigger a cascade of penalties, quickly snowballing into severe financial strain, particularly for those living paycheck to paycheck. Furthermore, BNPL services often target the most vulnerable, such as young adults, and those already facing financial difficulties, with their marketing strategies. These demographics are particularly susceptible to the allure of easy credit, risking a descent into unmanageable debt. Let's consider Emma's story. She's a single mom who turned to BNPL as a strategy to manage her budget, buying groceries, children's clothing, and school supplies. Initially, it seemed to help, but soon, the multiple installments overwhelmed her. Missed payments led to mounting late fees, exacerbating her financial woes, illustrating just how quickly BNPL can go from a helpful tool to a burdensome liability. Parenting is challenging enough without the added stress of BNPL complications. Emma's story is a poignant reminder of the need for caution and strategic financial planning when considering BNPL as an option. One big issue is that BNPL services are largely unregulated. They don't report to major credit bureaus, so these loans aren't reflected in credit scores. This lack of visibility makes it hard for lenders to assess a consumer's true debt load. If BNPL debt remains hidden, it could lead to economic instability. In May 2024, the Consumer Financial Protection Bureau, CFPB, issued a rule stating that BNPL firms must comply with certain U.S. credit card laws. This includes making refunds for returned products, investigating merchant disputes, and providing full fee disclosures. While this is a step in the right direction, it doesn't address the broader issue of phantom debt. Most experts agree that more regulation is needed. The CFPB's new rules are just the tip of the iceberg. For a comprehensive understanding, BNPL providers need to report their data to credit reporting agencies. This would help monitor the growing BNPL space and ensure consumers aren't overextending themselves. The absence of regulation also poses a risk to the lenders themselves. Without accurate data, they might underestimate the risk involved, leading to potential financial losses. It's crucial to strike a balance between providing easy access to credit and ensuring responsible lending practices. The lack of scrutiny about whether a consumer can repay a loan could have consequences for lenders. Credit scores try to provide an objective assessment of how likely a person is to pay their bills. The average FICO score in the US was 715 in 2023. Lenders use these scores to set loan terms, which could dictate the spending power of the American consumer. Having BNPL activities separate from the current credit check system prevents lenders from having that data to make informed decisions. If BNPL loans were integrated into credit scores, it could provide a more accurate picture of a consumer's financial health. However, integrating BNPL data into traditional credit reporting systems is complex and would require significant changes to existing frameworks. Regulating BNPL services to ensure they adhere to similar standards as credit cards could help mitigate some of these risks. This would involve more stringent checks on consumers' ability to repay, transparent fee structures, and consistent reporting practices. Such measures would not only protect consumers, but also contribute to the overall stability of the financial system. Consider the perspective of lenders who currently have an incomplete picture of a borrower's financial health. If a borrower defaults on a BNPL loan, it might not appear on their credit report, giving a false sense of security. Lenders might then approve more loans, unaware of the existing BNPL debt, leading to a potential financial disaster. As we navigate the evolving landscape of buy now, pay later options, the consensus among financial experts is clear. More regulatory oversight is necessary. The Consumer Financial Protection Bureau has initiated new rules, but this is just the beginning. For a truly comprehensive approach, it's crucial that BNPL providers start reporting transaction data to credit agencies. This would not only enhance transparency, but also help in monitoring the expanding BNPL sector and protect consumers from overextending their financial commitments. In wrapping up, while BNPL services offer undeniable convenience, they are not without their hidden dangers. As savvy consumers, it's essential that we recognize these risks and manage our finances with care. This exploration of BNPL's less visible perils isn't merely about spotting hazards. It's about equipping you with the knowledge to make choices that support your financial well-being. Think of your financial health as a garden. It requires regular maintenance and vigilant care to flourish. Avoid letting the shadowy roots of phantom debt creep in and cloud your financial future. Be proactive, stay informed, and nurture a healthy financial ecosystem. If you found this video enlightening, please give it a thumbs up, share it with your friends, and don't forget to subscribe for more valuable insights. Thank you for joining me today. Remember, the power to shape your financial future is firmly in your hands.